November's housing starts and building permits out just moments ago. November building permits down, worse than expected, to 1.34 million, the lowest level since June 2020. That is down more than 11%. Joining me right now, the Peebles Corporation Chairman and CEO, Don Peebles. Don, good to see you this morning. Thanks very much for being here. Housing starts and building permits down this morning. What's your reaction?
Oh, not a surprise at all, and they'll keep going down. It's a double whammy. It's the lack of demand, a declining demand, because buyers and consumers can no longer afford to buy what they could have bought last year, or they're priced out of the market. And then on the development side, the credit markets are essentially freezing, and developments of all kinds, either multifamily or single-family homes or condominium development, slowed down dramatically, even in markets like South Florida.
So, Don, is that largely because of what happened with mortgage rates over the last few months? I mean, look, mortgage rates have come back down to 6.31%. That's the latest last week. After the National Association of Home Builders Housing Market Index fell to the lowest level since June of 2012. That was yesterday. But we know that rates went all the way up to close to 7.5%. Was that the trigger that caused this demand destruction, or was it building even before that? Building permits have been dropping for a few months now.
Well, I think that two things. One, the demand was getting filled by a robust market. But when you talk about home mortgage rates in the 6th percentile range, that's double. That's 100% more than what those rates were about a year ago. And so think about it this way. A person or a home buyer or a family that could afford to buy a $500,000 home a year and a half ago can now afford to buy a $250,000 home. And so there's nothing to buy at that price point, for example, that would satisfy their needs. And so what you're having is the interest rates are pricing most people out of the market, or they're pricing them down to a product that they do not want to buy. And I think that that will continue. Now, what will happen over time is when we get control of inflation and interest rates begin to fall, that's a few years out, I believe, then we'll see a recovery. But right now, Americans, they've been hit by taking cash out of their pocket with out of control inflation. And now this extreme reaction of rapidly raising interest rates has taken away their buying power on the two biggest purchases that they'll make in their lifetimes, many of them will, and that's home buying and car purchases. And at least the car manufacturers are subsidizing the rates.
Yeah, absolutely. So, Don, you've watched these markets for so long, being a developer in the U.S., Florida, New York. How long do these cycles usually last? I mean, we haven't even hit recession yet, we had one earlier in the year, but we could have a double dip, according to many expectations. How long does this down cycle, in your view, last?
I think through the presidential elections. I think what you'll see is 2023, late first quarter, going into second quarter, we'll see a recession come into play. You will see demand continuing to decline, affordability challenging as well. And I think that'll run until some policy changes. Because right now, I mean, if you look at from a governmental perspective, there's no real policy on how we're going to address some of these things. Americans need homes. They need a place to live. We are short in every major market with regards to housing, and you've got an affordability and affordable housing prices as well in most of the major cities in the country.
Yeah, we've been talking about inventory for a while right now, and it keeps showing up as a major issue. Look, what about insurance? Florida Governor Ron DeSantis signing a new property insurance bill. It's aimed at lowering the state's skyrocketing homeowners' insurance expenses. Your reaction?
Yeah, the good news is he's doing something about it. If you look at the contrast, California, fire insurance, is stratospheric, most often more than the mortgage payments on the home. And so something has to be done to these out of control insurance costs. But on the same hand, the carriers are absorbing massive risk. You're taking a big risk to insure in Florida, and you take a big risk to insure in California, especially anywhere around where there have been, out of control fires. So I think that DeSantis's move is going to be focused on trying to help the average person be able to afford to live in their homes. Yep.
All right. Real quick, Dagan, jump in.
Don, on that note, what kind of risks, though, does the taxpayer in Florida take on? Because Florida has this insurance pool of last resort, and that as more and more property insurers are dumping homeowners, they wind up in this state-run fund for their insurance. So what kind of risk is the state taking on because of that?
Well, I think the state, it's a good question. The state has to take the risk, because what will happen is fewer people will move to Florida if they can't afford the homes or they can't afford insurance, because the lenders are going to require it. Consumers are being hit very hard. So I think they have no choice. If they don't step in, then the taxpayers are going to have to pay for it in another way. I think DeSantis' move was a very smart move.
Yeah, seems that way. Don, it's great to see you. Thanks so much.
Thank you.